Hi and welcome to our next presentation, this time with Nordic Waterproofing. And with us we have the CEO Martin Ellis, who will present the company, and afterwards we'll follow up with a short Q&A. Myself, my name is Max Bacco and I am an equity research analyst here at ABG. With that said, Martin, please go ahead with the presentation.
Yes, thank you very much, Max. I'm happy to present Nordic Waterproofing. A quick presentation and outlook also, given that we live in turbulent times right now. So if we start, our business is protecting buildings and infrastructure. On the next slide, we have a short history of our development. We were created in 2011, IPO'd in 2016, and since the IPO made a number of acquisitions, 25 acquisitions over the year, doubled our size. And you can also see that we have intensified our acquisition drive last year, and we have already made one acquisition this year also. Moving on to what we are doing, we have two segments in our business. One is industry, basically manufacturing waterproofing and other building materials. And you can see a few examples here, which is very much linked to roofs and facades, the outer shell of the building. And the second business segment on the next page is actually installing these materials. And that's what we call installation services. A lot of that is still our legacy business, waterproofing membranes, which we install on roofs to protect them and to protect the insulation material, which is below our material, which needs to be kept dry to have its thermal insulation properties. We also make prefabricated roof and facade elements, which are wood-based. That's a business we entered 4 years ago, and we do that in Denmark, Norway. We then have smaller business segments, which are flooring, which we do mainly in Finland, and green infrastructure, which is a business where we produce cedar mats and cassettes in Sweden, which are then installed either on green roofs or in urban areas. We also have a metallic facade and eaves installation business, and in Finland we also install solar panels, which obviously is a growing segment. Moving on, I can show you a footprint, a geographic footprint. We are focused on Northern Europe, the 4 Nordic countries, of course, where we manufacture and install our products, but also a significant presence in Benelux and UK with our synthetic rubber membrane material, waterproofing material especially. We have, as a group, a relatively low exposure to cyclicality, since only half of our business is for new construction, the rest being renovation. So it makes for a relatively stable demand picture for our products and services. Moving on to the next slide, we can see that our business case is very strongly built on sustainability. First of all, in our legacy business, the durability of our material, which is at least 50 years, means that there is relatively low cost of renovation. Once we've installed our material, it stays there for many, many years, and there's no more environmental impact from replacing it. Also, as I mentioned, it protects the thermal insulation material, mineral wool or whatever our customers choose, and it's really important for a thermal insulation to work, to stay dry. So the waterproofing quality is really critical from that point of view and contributes to reduce energy losses in a building. The second item, which is really important, is the wood-based prefabricated elements. Basically, we are replacing concrete, cement-based solutions. Cement is a big emitter of CO2, whereas the wood we are using actually captures CO2 and contains CO2. So a huge climate-friendly impact from that shift from cement to wood-based solutions. Our green infrastructure business obviously contributes aesthetically, but it also contributes in terms of managing heavy rainfall. With climate change, we see more and more heavy rainfall, which tends to clog the sewage system because the water gets to the system too fast. And our green surfaces capture that water for a time and retain it. So they contribute to solving this sewage overflow problem we see more and more. Last but not least, clean energy solutions like solar panels are also in our portfolio. So very strong focus on sustainability. I would say also in terms of the acquisitions we make, we have a preference for acquisitions and companies who are active in the sustainable building solutions arena. Moving on, a short summary of our acquisition strategy and what we have achieved. I mentioned the focus on sustainable solutions. We also want to enhance our product and service offering for existing customers. We have a very good recognized service level with our customers, so they're happy to buy additional product categories and service categories from us. And we also have a opportunity, especially in the synthetic rubber membrane market, to forward integrate. We produce the membrane, but you can prefabricate a waterproofing for a roof in a shop, and that's what we're doing in a number of European countries. The acquisition drive has intensified last year, and I've mentioned here a number of examples. We moved into waterproofing contracting in Norway. We did that previously only in Finland and Denmark. We moved into the ponds and landscaping business in the Netherlands and the UK, where we use synthetic rubber membrane to create swimming ponds and other landscaping elements. Prefabricated wooden elements, which we have done in Denmark and Norway for a number of years. We also established in Finland. We acquired an additional urban green landscaping company in Sweden, and we rounded our product portfolio up with small acquisitions in Finland and Denmark. The growth since the IPO, as I mentioned, is 25 acquisitions, more than 25 acquisitions in 5 years, and we doubled the turnover of our group thanks to the acquisitions and the organic growth we also had. Moving on to the financial development, you can see that we've had continuous growth in our sales and our profitability. We had a number of record years. Over the last 4 years, we improved our results each single year, also last year. We have a EBITDA level of 515 million in last year, in 21. And that, I would say, is in spite of the pandemic, and it is in spite of a very significant input cost inflation. So we've been able, in our product and services category, to pass these cost increases on to our customers. In the installation services business, that takes a bit more time, and we're still in the process of doing that. We've achieved the ROCE, which is really the key profitability indicator we follow, of 16.6% last year, and it's significantly higher than the 13% threshold we've set as a minimum. We also continue to have a strong balance sheet in spite of the fact that we did build up inventory to make sure that we're able to serve our customers with the supply chain issues we've seen in general in the economy. So we tend to be on the safe side, building up both raw material inventories and finished product inventories to make sure that we can serve our customers. Next slide shows the situation and the impact of the Russian war in Ukraine. That's obviously a significant event. In our case, we have an impact which is almost zero. We don't have employees or subsidiaries in either of the two countries. The sales exposure to the area was limited. If you take last year's figure, we're talking about 0.4% of our turnover. We have cut exports at this time to comply with the general recommendations of the European Union, especially. The input from Russia into our raw materials, it's an indirect input which did exist to some extent with bitumen and with SBS, two materials which go into our waterproofing production. These have been discontinued, so the suppliers of bitumen have shifted the input from Russia to other alternative sources. So that means that we don't expect at this time any impact on our supply chain and on our capability to deliver products and services to our customers. On the other hand, obviously with the rise in oil prices due to the crisis, we do expect a further continuation of the input cost inflation, and we are confident that we're able to pass that on to our customers over time. As I mentioned, it takes a bit longer in our installation services business than in the manufacturing business. We have also immediately collected money and donated money to support refugees from Ukraine. Next slide is a short, and the next, please, is a short picture of our last quarter last year. So we have seen strong demand. We also see in the short term strong demand going forward. Input cost inflation I described, we've been able to manage that to a large degree. Prefabricated elements, the wood-based elements, have seen slightly lower in the quarter, but we continue to be optimistic, and there's a strong tailwind for wood-based solutions throughout our geography. We don't see that changing. And also we had organic growth in our green infrastructure business, which had a bit of a downturn in the last 2 years. So again, we see progress in that area also. Moving on, we have financial figures which are, as I mentioned, a record year last year, but we did have a bit of a profit drop in the installation services in the last quarter. Again, we are confident in the future of that business. Moving on, the key targets we have, we've ticked basically all the boxes in terms of sales growth, profitability, and capital structure. So we're basically able to make additional acquisitions, and we have an active pipeline. And we also have proposed to the General Assembly to distribute a 6 SEK per share dividend, which is beyond the 50% threshold we've defined. So we're in compliance with all of these targets. Next slide just sums up why we believe that investing in Nordic waterproofing makes sense. We have strong market positions. We have a strong emphasis on sustainable building solutions, a low cyclical sensitivity, and a continued strong balance sheet. The yield with the current share price obviously is very attractive. We are approaching 4% yield on our shares. So that was my presentation, and I very much look forward to questions.
Yes, thank you very much, Martin, for the presentation. I think we could begin with, as you said during the presentation, in the installation service segment, which has been struggling last year due to component shortage, restrictions related to on-site work, and also to struggling companies. What are your expectations for 2022? Should we see an improvement in terms of profitability this year?
Yes, absolutely. We are very confident that we can achieve that. And the reason is that we have a very strong order book in our Finnish installation service business. We also have been able to adjust our sales price level. So from that point of view, we should have increased, or you could say decreased margin pressure as far as we can see. And on the other element being that the difficulties we've had in Norway, where we acquired a company which had some trouble. There we have new management, and we're confident that we're going to be able to improve that situation. So we are confident that results will improve this year over last year.
Okay, perfect. And the installation market is much more fragmented than the waterproofing market, which is your other major segment.
Correct.
And your current market share within installation is somewhere around 10%. What are your long-term objectives within this segment in terms of market share?
Yeah, I think we have different market share, obviously, in different countries. So in Finland and Denmark, we are probably talking more about a 20 to 25% market share. In Sweden, we have a very small business, just one company where we have a shareholding. In Norway, we are probably talking about 5 to 8% of the market. So I think in Denmark and Finland, it's relatively difficult to increase our market share further, but we also are looking at opportunities. I would say in Sweden and Norway, there's still obviously large potential for increased market share, and we are actively looking at that. You could say that in these countries there might be a bit of a consolidation move, and we will actively look at what we can do in that arena.
And last year, a lot of the organic growth in the product and solution segment was driven by price increases to offset the cost inflation, whereas volume growth was quite muted, at least in H2 21. What are your expectations for 2022? Is it the price increases that will drive the growth, or do you see some underlying volume growth as well?
Yeah, I think if we talk about the legacy business, it's probably a stable situation. If you look at prefab elements, wood elements, solar panels, and green infrastructure, we probably will see continued tailwind, and there we would expect some organic growth on top of the sales price variance. Okay,
perfect. And lastly, in February, you acquired Gordon Low in the UK, the first acquisition this year. First, could you elaborate some on the acquisition and the rationale behind it? And also the usual question, how does the acquisition pipeline look going forward?
Right. So regarding Gordon Low, it's basically an extension of the forward integration we've been doing in the synthetic rubber arena for many years. And we also will use the opportunity to implement the district pond, swimming ponds, and other landscaping applications of our synthetic rubber in the UK. So we started this business by an acquisition in Belgium. We've made another one in Holland, and now we will implement the concept in the UK. So it's basically a continuation of that strategy, which has been successful for us. In terms of the pipeline, we do have a number of targets where we are discussing right now. Obviously, multiples are still quite high. They might well come down now in line with the stock market evolution. So we're quite confident we'll be able to get acceptable deals also this year.
Okay, perfect. I think we are running out of time. Thank you very much for joining us, Martin. Always a pleasure.
Yeah.
Good luck
Pleasure
in the
for me too.
future. Yeah, and we'll talk soon.
Yes, thank you very much.
Bye.
Have a good day.
You too.
Bye.